US Deputy Treasury Secretary Wally Adeyemo said yesterday that Washington had no plans to apply sanctions on countries or companies that failed to join a proposed price cap on Russian oil. This statement somewhat eased concerns among market participants and even led to a local decline in oil prices. However, later, the quotes quickly returned to the area of $100 per barrel. In fact, Adeyemo's comments indicate that Western countries are determined to impose a price cap on Russian energy. Even if the US does not enforce secondary sanctions, this step will lead to a redistribution of supply chains. At first, the energy market will inevitably face supply disruptions and local shortages. Thus, the risks of a global energy crisis, which is expected to emerge this autumn, remain. Moreover, they have increased. This means that oil still has every chance of gaining strong upside momentum. Now, let's take a look at the trading chart. From a technical point of view, Brent crude oil futures fell below the area of $97.50 and $100 per barrel, touching the level of $94.50. After that, the market faced a technical pullback, which enabled the quote to return to the area of the broken level. Given that the asset failed to fix below $97.50 on the forward chart, it can be assumed that the area of interaction between trading forces is still putting pressure on a short interest. Thus, a scenario suggesting a price rebound cannot be ruled out. At the same time, it's worth monitoring price fixation point on the 4-hour chart, as the downtrend is still relevant in the market. Meanwhile, gold continues to lose value. The yellow metal has already come close to $1,700 per 3 ounce. In the near future, the quotes will most likely dip below this level, followed by a possible local rebound. Then gold will probably resume its downward movement. After all, the asset is still trading under pressure from negative fundamental factors. In particular, the US Federal Reserve's monetary policy tightening and the European Central Bank's upcoming interest rates are weighing on the precious metal. Moreover, the US regulator may well take a more aggressive approach to rate increases. Therefore, gold is expected to extend losses. The Russian currency has been trading slightly above the mark of 58 rubles per dollar for the fourth consecutive day. At the same time, rumors say that the Bank of Russia intends to further cut the key interest rate, but at a rather slow pace. This, in turn, may support the ruble. However, this is just rumors and assumptions, which is why traders have taken a wait-and-see approach. Apparently, the dollar-ruble pair will continue hovering within the current values until the next meeting of the Bank of Russia Board of Directors, scheduled for the end of the next week. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.